Welcome to another episode of 51 Insights, today with Joseph Lubin. Joseph, welcome to the show.
Hey, Mark. Thanks for having me on.
Yeah, I'm delighted to have you here today. Joe, you're the co-founder of Ethereum. You're the founder and CEO at ConsenSys. You're also the chairman of Sharplink. And before we jump into the prepared questions, what's the mood today at the ConsenSys headquarters?
ConsenSys headquarters. Well, ConsenSys headquarters is planet Earth. We're a very remote company. We do have some offices around the world, but since COVID, we essentially shut down lots of our offices around the world. And we gather in some offices, smaller offices, and at different events around the world. And the mood on Slack is reasonably positive. There's certainly some awareness that there's volatility in the global economy that is translating into volatility in our ecosystem. And it's never fun to see crypto prices go down, but it doesn't really reflect how well the Ethereum technology is doing, how well the Ethereum ecosystem is doing, and how well ConsenSys is doing. So I think we're balanced as we watch markets face some challenges, and it's obviously not just crypto markets that are facing challenges.
Yeah, and you're right. Bitcoin is down 13% today. Ethereum is down 14%. Meanwhile, institutional adoption continues at unprecedented
also
scale.
Up an infinite percent from its all-time low. It's like, as the Trump administration won and came into power, there was a massive surge in the Bitcoin ecosystem and related ecosystems. And so people tend to focus on the negative news more than the positive news to some degree. And really, this is all about the volatility that we are experiencing quite naturally as we move into the end of the current 80 to 100 year super cycle. So things are cracking up, and the volatility will translate into cryptocurrencies. But the next super cycle is essentially going to be based on decentralized protocols and AI. And so it's not like we're falling apart as we collapse and die. It's like we're oscillating and growing stronger and stronger ultimately. If you squint your eyes and look at a semi-log chart of Ether or Bitcoin, looks like a pretty straight line, actually, up and to the right.
Yeah, and that's a good keyword. I still remember your speech at the Paris Blockchain Week in March 2023. You said a lot of interesting things, but one of the things I remember is you said the world is broken, trust in nearly all institutions is lost, the complex systems we rely on for our survival are daunting and unwieldy, bad actors of all stripes take advantage of the mess, and we are in the dying stages of an 80-year monetary regime and debt super cycle. The conclusion is clear, the current system is unsustainable. The answer is decentralization. What did you mean by that, and what is going on?
That was well said. So I can frame that in a bigger picture. Essentially, there are a lot of economic philosophers that have framed super cycles, and usually they're 80 to 100 year super cycles. So Ray Dalio has studied many cycles economically. Strauss and Howe put together a theory of generations where they have a seculum that's 80 to 100 year super cycles consisting of 4 generations. There's Peter Turchin has a theory of oversupply of elites, and so it all comes down to natural behavioral patterns that cause somewhat inevitable economic oscillations or outcomes. And so the previous super cycle ended as the world sort of crashed into World War II. And World War II was, in Strauss and Howe terms, the fourth turning or the final generation of a super cycle. And that's an era where everything in the previous super cycle just breaks apart, smashes into walls, and all trust has already been lost, and everybody's fighting it out for positioning in the next super cycle. And so America was the strongest economy, the strongest navy, had a functional military industrial complex coming out of World War II. And so it was in a position to write the rules of the rules-based order. So it's really America dominating the supercycle. America was concerned about the Soviet Union, and it put together a strategy of containment. Essentially, it constructed NATO and did its best to contain the communist scourge in the Soviet Union and around the world. And so that sort of dominated maybe the first half of the supercycle, and maybe technology dominated the second half of the supercycle, where big tech, all the different industrial complexes, whether it's the censorship industrial complex or the pharmaceutical industrial complex or education or scientific publishing, they're all big business that essentially started to wrest power from governments, and big corporations have been running the world more than they have in previous generations or previous eras, I would argue. So as this supercycle moved into the second and the third generation, by the third generation, there started to probably appear cracks in the new system of the world that emerged in the first turning of the supercycle, where there was this new hope, this new social contract, and the world began to grow again with optimism and sort of trust in the institutions that were established. And so that moves forwards until things like technology make the system of the world no longer ideal for serving the people and organizations of the world. And so we moved into an era where the cracks just appeared in the 80s and 90s, and I would argue that big tech, social media, etc., created weapons of mass manipulation, and those weapons of mass manipulation were made use of by all sorts of actors, including enemies of the United States of America, and the polarization that was introduced into political systems and into social network and social media systems has caused essentially a tearing of the social fabric on the planet. And America suffers from it, but so is everybody around the world, really. So we are careening towards a brick wall at the end of the current supercycle. Institutions are falling apart. There's way too much debt in the system. And so we're in this era of excessive money printing. In order to financially repress the population, you need to pay off the debt with cheaper money. And that leads to a disparity in terms of wealth. It leads to nihilism or loss of hope amongst many people in the world. And so we are facing some great difficulties at the end of the current supercycle, and we need a new hope, essentially. So ideally, we avoid a kinetic World War III, something where there's extreme physical hostilities, although we're seeing a bunch of that around the world as different nation states position themselves. But ideally, we can, via the use of decentralized protocols, via the invention of decentralized trust and the implementation of decentralized trust. First, it was invented by Satoshi and operationalized in Bitcoin, but then Ethereum, in my opinion, as expressed by Vitalik, is the most powerful expression of how we can bring decentralized trust to all the systems of the world, not just to certain aspects of money. And so we have a chance of getting through this mess. We're going to have to print a lot of money so nation states can pay down their debt. That's going to be positive for certain assets around the world, including cryptos and precious metals, etc., as we're seeing. And we have a chance of making use of artificial intelligence to enable us all to have access to the sum, wisdom, and best practices of humanity, so that we can all level ourselves up on any topic in real time and have AI allies that can enable us to do pretty incredible things in short periods of time, and essentially create a new kind of economy that enables people and communities to have economic, social, political, financial empowerment and agency in their lives. The problem is, as we crack up, there's going to be incredible volatility in the dissolution of the old system and the startup or instantiation of the new system, which should be dominated for a little while by AI and decentralized protocols.
You mentioned a change in a monetary regime. You mentioned a change in a political regime. cryptocurrency and blockchain and Ethereum and Bitcoin, they're both a technology, but they're also an asset class. Do you think blockchain and Ethereum will have a bigger impact as a technology or as an asset class, given the increasing amount of debt and a change in the monetary regime that might be coming?
I think the idea that that asset classes and technologies are very distinct is the current concept, but I don't think it's going to necessarily prevail for that long. Even asset classes are currently partitioned. They're structured differently. They trade on different exchanges. And so we are moving into a world where virtually everything will be financialized, where many of the financialized things will be gamified. So I think we're moving into a world of markets for everything. And that might seem concerning to some people, but markets are really the most efficient structures for price discovery and for decision making. Ronald Coase created a theory of the firm, a Nobel Award-winning economist, and his thesis was that there are all sorts of costs in organization and coordination that can be reduced if you bring a whole bunch of people into a firm, into a corporation, and the proper size of the firm was just big enough so that you can reduce your costs in these internal coordination issues. And when you can make use of markets which are more efficient, then that constitutes the boundary of your organization. So we're moving into a world where the coordination costs of doing virtually everything are dropping dramatically. I have an intelligent agent, a digital twin that works with me in an intimate way and coordinates my access to lots of different agent experts and large language models, etc. I can do a lot of things with the corporation of one person and a bunch of agents. So I don't need janitorial staff and typing pools and giant sales forces, etc. And so that's a world that will be saturated with AI, and it's a world that will sit and benefit from the immediacy, the instant settlement of transactions, the use of lots of tokens for native blockchain assets or real world assets. In a world like that, it's going to be really hard to separate the technology or the use cases or virtually anything from the underlying financial elements, the asset classes that are so intrinsic to everything that we do.
Joe, you're one of the Ethereum co-founders. Ethereum started 10 years ago. You just described us that vision of a world that's based on decentralized trust. Can you take us back to that moment? How did that original vision look like, and how did Ethereum come about, and what changed during those 10 years?
Well, I can't take you back to the moment of inception because that happened in a very centralized way in one person's brain. It happened in Vitalik's brain, and he was traveling the world working on different crypto projects. It was his, well, there were a bunch of projects in, say, 2012, 2013, did have the insight that, hey, this new invention of decentralized trust, one of the most profound inventions in human history, that should be applied to much more than just Bitcoin, much more than just money. And so all of those projects had articulations that were suboptimal. So you'd have to potentially build new use cases directly into the protocol. Vitalik's innovation was that we can just put a virtual machine at every node of a rigorously decentralized network, and then normal software engineers can come along and they can build any application that could be deployed on this decentralized network. So that was the inspiration. It was such a powerful and well-articulated vision that a lot of us got really excited about it instantly and glommed onto the project and self-selected ourselves as team members of the Ethereum project. And so there wasn't a process for hiring people, that there was no coordination, really. There was no interview, structured interview process. Nobody was rejected, saying, no, you can't become part of the Ethereum project. You're not hired. It was over 100 volunteers at different points in time in that first year. And I would argue that that's why Ethereum was successful. If we had, say, taken some VC money, it would have had a totally different vibe, shape, architecture, and it would not be seen to be essentially of, by, and for the people. It would have been a carefully controlled business designed to build a product, find product market fit, and win the market, essentially. So the fact that it was open, community driven, essentially conceived of as a civilization scale technology rather than a business that had to achieve profits. I think that's why it has effectively won. So you could argue that Apple and Google are maybe civilization scale technologies right now, but this is more like TCP/IP or HTTP, HTML, etc. This is Ethereum is the biggest part of Web3, and as such, it's a natural evolution of the internet and the Web 1 and Web 2 protocols.
You described the core philosophy of Ethereum very well, like open, community-driven, civilization-scale technology. Over those different crypto cycles since 2009, since Bitcoin's inception, we saw several cycles. This is now the fourth cycle. Every cycle we saw new layer ones coming along and fade away again. The last cycle, it was Solana, focused on massive throughput and speed. How do you look at chains like that? Is that something that you're used to because you've seen a lot of chains come and go, or do you see them as a credible threat to Ethereum?
Well, in general, in our ecosystem, we have permissionless innovation and tremendous waves of innovation. ConsenSys protocols were an innovation, started with Kademlia in maybe 2001 or something like that, distributed hash tables. Bitcoin was an innovation in various ways, marrying decentralized peer-to-peer networks with economic incentives, creating a cryptocurrency, the first decentralized cryptocurrency at that point. Ethereum brought computationally complete virtual machine. We started building token standards. We just invented tokens that you could build on Ethereum, and then token standards. And we had this idea of capital formation in the DAO, and then ICOs, these public permissionless launches. Decentralized finance was an innovation. NFTs were an innovation. Meme coins, for what it's worth, some of them are actually really cool. They're an innovation. And some of those innovations were contortions caused by an SEC and U.S. government that was trying to kill our ecosystem and didn't help us build healthy structures for capital formation and for organizing companies on blockchains. And so I would argue that alternate layer ones, I would argue that different formats for layer twos being built on Ethereum are part of the constant wave of innovation. Most of these innovation waves end up with some sort of revelation, which is very exciting. This is going to change everything. Everybody buys into it because everything is tokenized. Everything exists on live monetary rails in our ecosystem. So it makes it exciting to build in our ecosystem, and also fraught at times. And so you have this great set of projects or one project, and then you've got a bunch of copycat projects which are not so good. And then you've got the exploiters come in and they copy and they essentially harm lots of people by pretending that they're doing this same good thing. And so you get a blow off top, and the market corrects wickedly, and people feel harmed and hurt for periods of time and stay away for a little while. So you're going to see the waves of innovation come faster and faster in our ecosystem. So we're having a wicked sell-off right now. And we had a wicked sell-off in October 10th. And that's largely because of the extreme oscillations as we move into the end of this this global macro supercycle and geopolitical supercycle. Layer one, some of them will stick around, probably. A lot of the layer twos, I think, will stick around, but even the layer twos are going to have to reformat some of their thinking. I think a layer two rollup construct is incredibly valuable to be used as a partitioning system or to bring a new technology into the Ethereum ecosystem. So our Linea Layer 2 ZK EVM technology is, in my opinion, incredibly valuable because it is 100% compatible with Ethereum, and because we've constructed it to be the most enterprise-friendly blockchain system in the Ethereum ecosystem. We can't say that much about this right now, but major institutions are using it currently or kicking the tires on it, and it is likely to become the canonical enterprise Ethereum layer 2 blockchain. And so having layer 2 blockchains that say nation states can adopt, so Switzerland doesn't want its data to leak out of Switzerland. That's a law or a set of laws. And so Switzerland might want to set up a layer 2, and this is just hypothetical, set up a layer 2, and then all the cantons could have their own layer 3s or something like that, so they could have an integrated cantonal national infrastructure, and that would be plugged into layer 1. If you were asking whether we're worried about Ethereum killers, no, we are not worried. There was a special period in time when something like Bitcoin could be developed and grow and become successful. There's a special period of time where a project like Ethereum could be formed and grow and have the runway and the patience and the brilliant participants and different supporters to grow an ecosystem, to grow affordability in block space, to grow scalability while still adhering to the core principles of the technology, which is rigorous decentralization, credible neutrality, censorship resistance. And so I don't think there's any way that any VC-funded project or even token-funded project currently could come close to rivaling the magnitude of what Ethereum is currently, because there's just so much has been built over the 10 and a half years that Ethereum has been running nonstop. So feeling pretty good about Ethereum, and I do think that lots of innovation will be really valuable, and I look forward to maybe some layer 1s, but hopefully lots of layer 2s.
You just said it, commercializing neutral infrastructure is often a balance between commercialization and decentralization. Critics have said that Ethereum Foundation is a little bit too hands-off when it comes to pushing institutional adoption. Do you agree with that, or how do you see the role of the Ethereum Foundation?
So who are these critics, and when did they say that? Because there's a new Ethereum Foundation in town, and they're doing some pretty impressive things. So Ethereum Foundation is drastically reformatted. Executive directors are doing a very good, very energetic job of reaching out, being available. I think Tomasz has been traveling the world. I think he said something like a few hundred people that he's had meetings with over the last roughly year, as he makes a concerted effort to make sure that everybody knows that he's accessible and that the EF and he are listening. There are many new groups filled with new talent being spun up, and they're focusing on privacy, they're focusing on quantum safety, they're focusing on enterprise. There is an enterprise focus group. I spoke with Tomasz maybe yesterday. I know that they are plugged into things that global financial infrastructure cares about, and they're working to help facilitate that, as we are at ConsenSys. So I'm very happy with the directions of the Ethereum Foundation and the sort of shift. So it wasn't there was a shift midway last year in sentiment in the Ethereum community. And so I think that was partially organic, partially because price went up, because price always drives narrative, and partially because the Ethereum Foundation really did a beautiful job of reformatting itself. And a lot of that was driven by Vitalik and Ayako, where they've been working on that for about a year. And so they picked up on the necessity, and the timing was great. The execution was even better.
If you talked to an institutional investor or a corporate executive who wants to build on Ethereum, invest in Ethereum infrastructure, what would be the project that you would point them to that best encapsulates what Ethereum is capable of?
That's like saying, what's the right kind of project to put on the internet? So the internet essentially subserves the bulk of the global economy. And as more people appreciate the value of decentralized trust, which is going to be a massive accelerant for the global economy, essentially making reducing many kinds of risks in financial and other kinds of transactions and accelerating the velocity of many things in the economy. So Ethereum is a general purpose decentralized trust technology, and you can build anything into it. You can tokenize protocols where the token is native. They can be DeFi protocols. They can be things like prediction markets, which I think are going to be absolutely giant. You can build entire businesses. You can build infrastructures for communities of AI agents, things like that. It's just hard to answer a question that is so general. Let's say anything that would benefit from better trust is a good candidate for figuring out how to build itself on Ethereum.
Yeah. And maybe I need
everything.
Yeah. Maybe I need to formulate the question differently. Sure. If you get up in the morning, you're CEO at ConsenSys, you're still working day by day in crypto, building infrastructure, building on Ethereum, what excites you? What keeps you going? What are some of the projects you look at and you smile and you think this is what we're building for?
Well, Ethereum makes me smile. Moving into a world of sounder trust foundations is incredibly important. As we find ourselves at the end of a super cycle with the world essentially falling apart, with centralized trust no longer serving people, it makes me happy that I believe we do have a good alternative to build and to look forward to. I'm particularly excited about how AI will evolve, and especially how AI will evolve alongside or on top of decentralized protocols. So I do understand the current need for building a large centralized foundational models with transformers or related technologies. But I think we should all be a bit wary of big tech, because big tech has used AI over the years to effectively exploit us in different ways, exploit its customers in different ways. It's also done some great things for people around the world. What I would be concerned about is very powerful AI in the hands of a small group of nefarious human actors. So I hope we don't see that in any of our organizations in the U.S. It's maybe much more likely in other nation states. Ultimately, I can imagine that we have a large set of foundational models, some of which are tuned for America, some of which are tuned for different cultures and understand the subtleties of different language, etc. But really, there are lots of ways that AI and decentralization can interoperate. Mostly, I want my own digital twin agent running on my own computer with my own personal operating system. And maybe it's even part of the MetaMask money operating system that we're building. And I want it to know a lot about me so that it can do my bidding out in the web, maybe in the physical world, etc. But that thing should be fully decentralized in the sense that maybe I can buy a partially trained up agent and then I make it my own, and then it continues to learn from me as I learn from it. Maybe it protects my identity, even as it's sharing in real time information about me and information about my surroundings. So it's not personally identifying information that it's sharing, but useful things so that other AIs can benefit. So that sort of thing, it would be really great, in my opinion, if a lot of people experience the web from the protection or behind the protection or with the protection of their own agent, their own AI agent. that can essentially depolarize the incredibly polarized discourse that we're subjected to on crypto Twitter and other social media, so that we can get good, clean information and rational interpretations, and we can get back to engaging in reasonable discourse, maybe through our agents, and maybe we'll be able to do it ourselves, even without the help of our agents eventually. So I think moving into a world that we're all going to be very happy with, it's going to serve us all really well, but it might be a little bit bumpy for the next little while.
That's very interesting. You mentioned the frontier models. Most of today's frontier models are centralized. So we have Anthropic, we have XAI, we have OpenAI. They have millions, hundreds of millions of users already. How do we avoid that this turns out like it turned out with the internet, where we had a decentralized network at the beginning, and then those centralized big social media platforms came along? How do we avoid that, and what role can blockchain play in that?
Yeah, so solutions along the lines of what I described, where there are centralized AIs that we can usefully interact with, but that don't control our personal information and don't control how we access them. I think that's a big piece of it. If I have control over what intelligences I talk to and what I do in this whole giant human machine intelligence hybrid organism, then I'm fine with really big centralized intelligences. The problem is that our interfaces to big tech have not really been under our control. We're constantly fed the information, the feeds that are designed to get us to click more, and that has caused, for business purposes, it's caused our feeds to be much more polarized. And so it has essentially caused us all to go, if not insane, but at least a little bit agitated when we interact with each other on social media. And that turns into a weapon of mass manipulation for people who want to, one of the many weapons of mass manipulation for people who want to create havoc in, say, enemy nation states or your own nation state, if you want to change the political landscape of it.
I want to touch on that topic quickly, and that's Digital Asset Treasury companies. That has been a big narrative in the last year. You became chairman of Sharplink, one of the biggest Ethereum treasury companies. Why did you join them, and what's the pitch to investors today on DATs and Sharplinks?
So in 2025, Bitcoin was doing well. People understood its value proposition and could buy into it. And the incoming of the Trump administration and other elements essentially drove the price of Bitcoin up significantly. The meme coin casino Meta was very good for Solana, and Solana ended up doing very well. So they had value propositions that were very immediate for both of them, and they had different cohorts that could buy into them. Ethereum's future had always been in front of it. Ethereum was intending to be the global ledger for decentralized finance, global settlement layer for digital assets. And then once all of that grew mature, then it would become the substrate of the world computer, where lots of different applications, games, social networks, etc., would be built on that sort of more mature decentralized financial infrastructure. And at some point, so we were building scalability, affordability, etc. It became legal in the United States to be a blockchain company, where it was effectively illegal under the Biden administration. They didn't write any laws or give us any guidance, but they're still trying to sue people and etc. So halfway through 2025, the Ethereum technology was working well, and there was still a sagging in prices. There was slack supply-demand dynamics for the token, and that's because Layer 1 essentially ceded pricing power to the Layer 2s, so they could establish themselves and build ecosystems and flourish. So that was intentional. We knew it would cause fragmentation, reduce composability across the network, but we felt that this was the only way that the Ethereum ecosystem, or Metropolitan Ethereum, could become internet and web scale. And that has worked out quite well. Optimistic technology for layer 2 rollups, ZK, zero knowledge EVM technology, Ethereum virtual machine technology, was built and is doing incredibly well, and has actually become not just the technology of layer 2s, but it's useful for messaging, and it's moving down into layer 1, and it's going to bring orders of magnitude scalability to layer 1. And so with all that as a backdrop, with Ethereum scaling and yet price not representing how well we thought we were doing, we had a dinner in December 24 with Michael Saylor, and really appreciated his personal and professional story, and felt that he did some brilliant things with MicroStrategy, now Strategy. And it just became clear to me and my colleagues at ConsenSys that, hey, we can do this better, because Ethereum is much more broadly utilized. Ethereum is a productive asset in the sense that it throws off yield, risk-free yield and staking, and you can add other kinds of yield. And so we found a microcap company, Sharplink, and we led a round of investment into it, and I became chairman, and we have hired a truly stellar team. Joseph Shalom came over from BlackRock after a short retirement. These DATs, the Ethereum DATs, track the price of Ether quite significantly. So when Ether's down, the DATs are going to be down. But this is, we essentially raised $3 billion. It is long-term patient capital. All of it staked, all of it is earning quite significantly. And we will, similar to how our friends at BitMine, we will continue to accumulate capital and stake it or otherwise invest it in the Ethereum ecosystem. And in the long tail, we'll probably say get to 5%, as Tom Lee has indicated, and it'll probably be clear at some point that we need to stop raising capital and buying Ether. I will still keep earning yield on staking and other activities, but we'll probably end up taking this giant pile of highest powered money and start investing it into protocols that are highly aligned with and valuable for the Ethereum protocol.
Joe, we're almost at the end of the show. Before we end, I want to ask you that question as well. That's very recent. It came up 2 days ago. Vitalik Buterin said the roll-up-centric roadmap no longer makes sense, and that L2s essentially are not scaling Ethereum. What do you make about that statement?
So I think it made sense. It made sense in that it drove the creation of technologies, including the zero-knowledge proof technologies that are now permeating the Ethereum ecosystem. So they're enabling layer 1 to scale alongside a few layer 2s. The layer 2 construct is going to be incredibly valuable for nation states to have their own partitioning, for sub-regions of nation states, for gaming ecosystems to have their own layer 2s and layer 3s, for corpo chains, for consortium chains. So layer 2s are here to stay. What Vitalik was referring to is that many of these layer 2s have developed up to a certain level of maturity, and they've stopped there for different reasons, whether it's a technological reason or a business decision. And he doesn't consider those as being ideal scalability mechanisms for layer 1, which is correct. Well, it's there are good reasons for choosing certain layer 2 blockchain systems if your use case works well on that. And so his point is valid. I don't think he really meant that, and I think he says that too. He didn't mean that layer 2s are bad and wrong and they should all go away. He meant that they are not pure scalability extensions of Ethereum. But layer 2 technology is likely to evolve to the point where we'll have some layer 2s that essentially represent, say, burst capacity for execution. You could imagine that layer 1 is incredibly performant, and there are layer 2 extensions of that, where you can take state and behavior and move it up there to get a bunch of work done and bring representations of that state in the form of zero-knowledge proofs back down. So it's a spectacular technology. It's magic, and it is indeed scaling Ethereum.
It's magic. Joe, you described at the beginning the vision of Ethereum, the vision of decentralized trust, civilization, scale, infrastructure. What things need to happen? What needs to be in place politically, technologically, that this vision becomes a reality in the next 5 to 10 years?
So I don't know about the time frame. The vision is already emerging. It's been growing and maturing for, since the start of Bitcoin and the start of Ethereum. I guess there are two poles that outline a spectrum of how this could evolve. One is that it is not supported by nation-state constructs, laws, etc., and it has to do what it's been doing right from the start. It has to bootstrap itself in a purely decentralized, degen way. That's gone incredibly well so far. But we can also get some quantum leap assistance from nation states if they write good laws, and if organizations like the SEC are very pro-crypto, and the CFTC is very pro-crypto, and SWIFT is very interested in building their infrastructure on Ethereum technology. DTCC can potentially tokenize equities and other kinds of securities, and this is all happening. So I expect that, at least in the United States, and probably the rest of the world follows, we are getting that massive assist that we've been missing for a long time. And so for the next 3 years, I think we're going to be able to go really fast under the current administration, because we won't have irrational barriers to innovating on our technology. And ideally beyond that, there will be governance in place in the United States that continues to be a wind in our sails.
For the investors listening, do you think quantum is a risk for Ethereum, or how do you need to think about that in the long term?
Well, I'm not licensed to provide financial advice to investors, but quantum computers are not a risk to Ethereum at all. We will quite easily become quantum safe in the next very small number of years, and there is a quantum safety group in Ethereum right now. It's certainly more of a concern for the Bitcoin space, but I also think that it's possible that significant quantum computers will never exist. AI is a kind of magic that is going to supercharge all elements of science, and so AI plus human quantum researchers could get it done, but it's going to be really, really hard creating a quantum computer of a few thousand logical qubits, which is required to break certain kinds of cryptography. So I think that's a pretty long way out. Smart people disagree. Smart people agree.
Joe, if there's one thing that people not in crypto need to know about Ethereum or crypto, what would you tell them in a short sentence?
So Ethereum is all about bringing the most powerful form of trust to every transaction, every agreement, every process, and even relationships. All of those things can be constructed in a way that drastically reduces risks inherent in them and drastically grows the velocity that you can do these things, and will lead to tremendous growth in global economies.
All right, Joe, that was a great ending. Thank you very much for joining the show. This was extremely insightful. We could have continued for many hours. There are lots of topics in that space that are deep and interesting. Where can people learn more about you, about ConsenSys?
ConsenSys.io, on crypto Twitter at Ethereum Joseph.
Great. All right, Joe, all the best and talk soon.
Thanks, Mark. Enjoyed it.
Thank you. You obviously liked this video enough that you got to the end. Listen, do me a favor, hit that like and subscribe button, because I think you'll like it. And if you want even more, with more I mean incredible alpha, research, and digital asset market updates, subscribe to our newsletter on 51, that's the number 51insights.xyz, and get the most actionable insights on digital assets. See you next time.